The market rockets higher into a host of catalysts. Can the bulls keep pushing? This is Invest with Jacob. Okay, guys, so in yesterday's video, we talked about the fact that as long as the market held 42.65, we were looking higher towards the 43.40 to 43.60 area, and that's exactly what we saw. The market gapped up in the morning before trying to pull back to close the gap, failing and rocketing higher and closing around 43.40. Now, with a host of catalysts, CPI, the Fed, and OPEX this week, can the bulls continue to push? I'll get into that in just one second, but first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, there are a lot of catalysts this week that can push the market, so let's jump into the chart and take a look. Okay, guys, so here we are on the daily SPX chart. And the reason we're on the daily, I wanted to zoom out and give you a little bit of an update on the big picture because a couple things happened that matter. So they did come up and take out this high right here, and that was expected. We were looking for that. I said 43.40 to 60. They took out the high. I've said they were going to challenge this high since last October, and so they came back up and took it out today. Now, the key factor about this is if you look at where the MACD daily is, okay, this peak right here is the highest peak. We have negative divergence on this peak, which was a nothing peak. Then you had the A-wave completion, which had negative divergence from this peak. Then you have this peak here, which has negative divergence from this one and this one. So you have negative divergence big time on the MACD daily chart, which is a fairly strong indicator that the move is weakening. When you see negative divergence like we did down here, we saw a 700-point rally like we did right here. We saw an 800-point rally. So we're seeing the same thing on the opposite side now. We're seeing negative divergence instead of positive divergence, and we're seeing it on a high. So they made a high over the previous high on big negative divergence. So that is a key thing to understand when you think that this can be a direct bull move higher, is that typically wave threes eliminate divergence. They don't create it. So wave threes, when they start to explode higher, come up and take out these waves, and this particular wave has not done that. So I don't think we're in any kind of direct move higher. That has not been anything I've entertained until they absolutely prove it. And the takeout of this high on that strong negative divergence is very important to watch. The VIX was also very elevated today or yesterday. And we have several catalysts coming. So we'll probably have a pretty good idea of what's getting ready to happen by the end of the week. But our overall thesis remains the same. We came down on wave A. We were looking for this move back in October to 4,300 plus. We got it. Once the pattern revealed itself a little more, we were able to be a little more exact on our targets, and we've killed this move all the way up in our room. We're making money on longs here, and we're looking for the turn for this market to move down. So let's jump in to the smaller chart here real quick. Okay, and as we talked about in yesterday's video, guys, this was wave 3, wave 4, and the spike up on Friday was all of wave 3. We were looking for a wave 4 down, which we got, and it currently looks like we got a 1, 2, 3 setup. Okay, I told my room that this wave 3 would likely extend because the 1-2 setup only pointed toward 43.33, and I thought we'd get to 40 or 60, so I thought wave 3 would extend, and it does look like we're probably still in wave 3. I haven't seen a wave 4 pullback here of any kind. So we would look for, kind of a pullback, one more pullback, and then up toward the 43.62 area, which would be where we'd be looking for this move to top out somewhere in this area. But understand this, on the macro, we have enough waves in place for this move up to be done. They can wake up and CPI can drop it tomorrow, and that can be the start of the move down. On the micro, it would look better with one more pullback, one more push higher up into that 43.60 to potentially as high as 4,400 or so area. But overall, the macro is ready to roll over. The micro just has to finish out what it's trying to do. So that would be the bullish count. We'd look for a pullback that would hold and then a push up towards 43.60. Current support for this move up would be the 43.22 to 43.20 area. If they can hold that 43.22 to 20 area, that's a pretty good indication that they want to push higher one more time. So they would come back, hold this area, and then try to push from there. Now the bears obviously want to break that 43.20 area. Then they want to break through 43.08. That is a very key level to break through. It's the bottom of the pivot. If they can do that, break through 43.20, then follow through and break through 43.08, we could be starting to see the downside or the topping of this move, and we would look for follow through from there. Over on the NASDAQ, again, on the macro count, There are enough waves in place for this to be done and for us to turn over, but on the micro count, they would like to see one more pullback and one more high to complete wave 5. So you can see on the chart, we've been charting this pretty accurately the entire way. They held support overnight. They blew up off of the 618. We would look for them to pull back one more time and give us potentially one more high into the 1560 to 15128 area, pushing as high as 15291. But this is where we would expect it to hold the 15128 area, and then we look for a type of rollover on the NASDAQ at that point. That would be from a bullish perspective. The bears, obviously, they want to break support. Right now, support is at that 14,865 level. So they would want to break down through this 14,865, ultimately back down through 14,765. And then if they can break this low at 14,635, and really the big one, guys, this is the most important one, this 14,425 area. If they can break down through that, keep in mind this is adjusted for the contract roll. It was 14,250 before, but now it's 14,425 because they do move up on the contract roll with the adjustment on. We would look for them to break that level to give us a strong signal that the bears are trying to take back control of the market, and we'd look for the pullback at that point. Guys, if you love the information that I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It will take you right over to the web page. Once you're there, check out our membership plans area. We have 2 incredible plans here, and they both come with a 7-day free trial. Now, these are monthly plans. If you don't want to become a monthly member, we also have our Elliott Wave for Beginners course. This teaches Elliott Wave to people who don't understand it or want to understand it more completely. It is for beginners and what to expect with the basics of Elliott Wave. It is 25 videos where we go through my entire chart setup and tools, and all of the Elliott Wave for Beginners videos where I go over each wave and how they work and what to look for and how to find these targets that we find, how to understand where and how the market is going to move. To be clear, that does come with both of these monthly subscriptions. It is included. And in my first room, the Invest with Jacob room, you get all of my real-time market updates, all of my buy and sell alerts, all of your Elliott Wave questions answered, a midday video where I go over exactly where we are in the counts, as well as the training material you just saw. We trade the SPY and the QQQ, and we swing trade, which means our trades last anywhere from a few days to a few months. So we don't trade quite as often as a day trading room does. However, if you are interested in day trading as well as individual stocks, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, day trading, and PT's reduced risk binary method that absolutely crushes the market. He gets you in at a cheap price and gets you huge multiples on your money, and it's how he structures the trade that's so unique. It's something you kind of have to see to understand, and that's another reason we give you that 7-day free trial. He also started a challenge account where he put $4,000 into an account, trading mini ES futures, averaging 3 to 4% gains per week, showing you how to build a small account into a large retirement or savings account. Guys, we would love to have you in these rooms with us because we all want to make money together. All right, key takeaways for today. On the SPX, they made a high on negative divergence on several time frames. We are looking for a potential pullback and one more push higher, but they don't need to. Again, in the macro, we have enough waves in place, but in the micro, it would look better to complete this overall move with a 4 and 5 to the top. Over on the NASDAQ, again, they pushed up into the target area, but it does look like it needs one more pullback and one more push higher here, up into that 1560 to 15128 area, pushing as high as 15291. But a break of 14865 would be your first warning, and then 14765, and then 14425 would be the levels for the NASDAQ to break to start looking to the downside. Guys, that is your market update for today. I will talk to you tomorrow.